Like I always tell people, anybody using H&R Block to do their taxes deserves to
Oh,
be broke, right? Like it's your own freaking fault. Like if guys, there's so many ways to avoid paying federal income tax. To pay it is just it's ignorance in my opinion. Like it doesn't make sense. If you're investing in real estate, there's so many ways and so many write-offs, especially if you're also a real estate agent or real estate professional, as Mark will describe the definition of that, I'm sure at some point here today. But there's so many ways to do this, guys. What you need to do is you need to understand enough to have real conversations. Now, what I'm not suggesting you don't have to switch CPAs and you don't have to switch attorneys and all that. Obviously, I'm going to recommend you get the right people on your team because without them, you're just going to pay way too much, and that is the real problem. Is so many accountants out there know enough to be dangerous, but they really don't understand the nuances of this. So, Mark, let's start with this mom and pop. Okay. And I know we're going to talk short term rental properties in a minute and all that good stuff, but let's just talk really quick mom and pop that are not even selling real estate. Doesn't matter if they're a real estate agent, not a real estate agent. Let's talk about some easy ways they can reduce their federal income tax burden.
well, the number one strategy to paying less in taxes and building wealth and increasing your cash flow is having a small business. If you just want to work the day job, there's nothing wrong with that. Work for corporate America, have a W-2, love it. It pay off your debts, live the Dave Ramsey life, and all that. Love it. You're not going to get rich. You're going to pay taxes, but there's nothing wrong with that, and you can have a very stable life. If you're frugal and careful. But if you want to save taxes, you got to give me something to work with. I can't take write-offs for travel or dining or computers, electronics, cell phones. Where I can't write that stuff off unless you have a business. And guess what? Owning a rental property is a business. It's not investment, it's a business. Owning stock, owning crypto, that's investments. Can't write off my home office against my stock gains or crypto gains, but I can against a rental property, and that's a business. Now, if we generate losses there, we're gonna have a deeper conversation. But that's number one. You gotta give me something to work with.
I'm glad you said that. So, okay, let's talk just really quick. And this is going to probably get into graduate level stuff right away. But one of the things that you've had me do that I feel has been an important piece. But we've got the trust at the top of our of all the stuff that we do, and then underneath that we've got our Wyoming LLCs. Talk to us for a second about the importance of both a trust. And why do we do a Wyoming LLC filing as a subchapter S?
You go from mom and pop saving tax to a Wyoming LLC. Holy
I know it's a big leap, but I get this question all the time, and I feel like it's misunderstood. I don't think most people even know what a COPE entity is, and I think that's something that would be helpful. If maybe you could walk us through that.
Okay, let's get there, because if I go there too quick, it's going to be frustrating for some of you. Let's build a little foundation here, and know where I'm going. It's called the trifecta. The trifecta is a way to look at your overall wealth building and tax savings and asset protection. The Wyoming entity is a piece of asset protection. It's not going to save you taxes. And so we want to look at our wealth with this diagram. And here's what I do this for people worth 100 million, blown away, brand new couple getting married, buying their first home. We use the trifecta. You give it to all of our clients to help build a foundation for wealth and tax planning. This is what it looks like. The foundation is going to be your revocable living trust. We'll talk a little bit more about that. And your 1040 tax return. All the water flows downhill. All your money flows down into your 1040. So we want to use strategies up above and maybe even on your 1040 to save taxes. But all your wealth, all your ownership is going to flow downhill, down to your trust. Then we're going to split your life in half. So this is the first part of the trifecta. This is the foundation, number one. Then we're going to divide your life in half. 1, 2, 3. There's our trifecta. And over here, we're going to put your ordinary income. And this is another way to look at it, is this is your operations. This is paying the bills. This is going to be what you use to generate your investment money, your income, and the starting point. Because we've got to have some income coming in to get the ball rolling. Then over here, we're going to put assets or passive income. And this is where your ass is doing the work. This is where your assets are doing the work. So we want to build this side and bring this all together. So just a typical way, if you're a realtor or a small business owner, a landscaper, a consultant, a dentist, a doctor, whatever, you may have a day job, W-2 as well. You may be married, but typically as we build wealth, we're going to have an entity here. We'll talk about what's that going to look like. Is it an S Corp? Is it an LLC? What is it? But this entity is going to be your operational structure that doesn't own any assets. It's just like a goose laying golden eggs. And it's going to be owned by your trust. Then over here would be a typical structure of an LLC, which are not for saving taxes, but for protection and structure and legacy. And this LLC is going to own your rental property. It's going to be owned by the trust. So we have operations, assets, and all owned by the trust. Realtor, rental property, trust. Now, this is the starting point where then it becomes incredible. And we might have over here a 401k. We might have an IRA. We might have a Roth. We might have an HSA. We might have other entities to hold additional assets. We might have subsidiaries and partnerships and all this, but the foundation is ops, assets, trust. Mm-hmm. So as we continue our talk today, everybody, we're going to go back to this because we've got to put it in our mind somewhere so we can see it. And if we can see it, we can believe it. And if we can see it, we can make it happen. And so we want to build this wealth in a constructive way where it resonates with us and we feel safe and we feel excited. And this feeling gives us the fuel to go out and do it.
Club Wealth is the only coaching company on the planet that will literally guarantee that you will double your income or make at least an extra $100,000 your first year coaching with us, or we will give you 100% of your investment back. Click the link below, sign up for the appropriate tier level, and let's get you a strategy session today. And I promise you, I 100% guarantee you, promise you that you will walk away with a heart full of gratitude for the time that we took for you because you got so much value out of that call. Schedule your strategy session today. I promise you'll be glad you did.